Welcome everyone to the Kendall Report. It is Sunday, so just real quick before we get into tonight's video, I will be covering a long-term view, so hang in there for just a little bit. Just an announcement. So remember, this week is there's a video today. Next video is Wednesday and Thursday for this week. Next week is really messed up. I have to be out of town Monday, Tuesday, Wednesday of next week, so there's going to be a Sunday and a Thursday video next week. That's going to be it. So that's all we can do. So so let's go ahead and get into tonight. We just finished off a crazy quarter. The S&P now was up 2.3% last week, up 15.9% on the year, which is amazing. We're at midpoint, right? So this is literally halftime, and the NASDAQ is up 2.2 and up 31.7 for the year, and the Russell up 3.7 last week, so finally a little bit of outperformance, and up 7.2% for the year. So pretty darn good year, I'd have to say. And if you did any decent stock picking, you should have done as good as the NASDAQ, if not better, but certainly at least performing in that 20 to 30% range. And if you didn't, bad choice of stocks, I guess, from that viewpoint. Let's just talk a little bit about the economics that come in, and then I'll get into talking about setting up the second half of the year, at least the next quarter. I don't think I'll go to the whole half, but I will discuss what I believe will happen for the next quarter or so. Let's look at tomorrow, Monday. This video is for tomorrow. ISM manufacturing to come out 47.5. According to Joe Biden, he has increased the manufacturing in 2 years by 100%. Somehow the ISM manufacturing is negative contraction territory at 47.5. Anyway, you'll have to call him to get that explanation. So it's interesting. It's like anything. I always know when you're talking to, when people talk about how much money they made in percentages, if you always usually is a smaller account, they'll say, I'm up 350%. That means made $30 on a small account, right? So it's the same thing here. It's just, I mentioned this book that I talk about a lot. It's called How to Lie Through Statistics. You'll probably have to go on eBay to find it if you want to find it, but it's a great book. And I had that for a long time, and it's really funny. So, but a lot of statistics, and it's really about polls and how sampling and all that, but it's all about the numbers you look at. And I put out, I'll go ahead through these numbers and I'll get into some dialogue that I think is worthy of some time. So on Tuesday, we have the holiday. Wednesday, we've got factory orders expected to be up 0.6. Thursday, claims 245K, continuing claims 1.742. They continue just to be really strong and actually coming down in the last several weeks. And then on Friday, we get the unemployment numbers. So I'll try to set that up the best I can on Thursday's video as we get into the end of the week. 230K, just rough numbers at the moment. 230K new jobs expected. Unemployment expected to uptick from 3.6 to 3.7. So no big deal there. I was flashing back when I was getting ready for tonight's video, remembering I talked about this a while ago, that I thought that the highest level that unemployment would get to in this cycle was around 4.2, and that may still be a possibility as we come into second half of the year. But these employment numbers are going to be significant, as you know. Just real quick, a couple other comments about last week performance. We saw all 11 sectors up, and the big sectors, this is interesting, I think, the biggest return was real estate, 5%, and energy, 4.8%. Those are the biggest sectors of last week. So it's interesting that real estate continues to do well on balance. I talked to you about that home builders ETF hack that I did, and I think that thing is up over 30% now. I'd have to double check it, but it's right in there with the NASDAQ, and it's got none of the Amazons and those companies, all home builders, right? So there's a lot of places to make money, and I've argued, well, there tends to be a concentration of stocks moving the markets. It's always that way. In case you haven't looked at how the indexes are structured, they're all cap weighted toward the top end. So everything's always been dependent on the indexes anyway. Moving is that they're going to have those top 30, top 50 stocks of the S&P are driving most of the market. It's always been that way. So it seems to be a dialogue somehow to justify if you missed the market this year, right? So that seems to be the funny justification on that level. So so let's talk about a couple things. I put out a tweet just for some thought, and it was, everybody's hanging on to this yield curve narrative, and they keep telling us the doomsday is coming. It's over. Everything's going to roll over and come to the end. Real estate's going to go down. Do you remember, if you probably turn back the clock 6 months, maybe 8 months ago, what we were seeing was literally, I don't know, millions of videos, we'll say hundreds of thousands of videos out on YouTube telling you about the coming real estate collapse. They're still out there hammering on this, and it doesn't look like it. The problem with real estate, meaning the advantage in real estate, is we've been underbuilding for maybe 10 years. We're probably 5-6 million units behind what we need for the population. So it's probably not going to do as bad as people think. And as you know, and I don't know where I'll go in this narrative that we'll get into tonight, but I've been talking about this normalization of interest rates, and that continues to be I guess the narrative that I'm going to stick with, that the markets have already adapted to these higher rates, and folks keep waiting. Well, there's a lag. It hasn't adapted yet. No, it has adapted. So a lot of sales. That's why anybody that's bought houses in the last 3 or 4 months, they're paying the higher yields, higher rates. All that is happening. So I just want to dig in a little bit more, because we'll go through here in just a few minutes. I'll talk about the database. I have those numbers, and they continue to grow and confirm what I'm telling you. And I think what you'll see when we get into the longer term stuff is that there's just more upside. And I don't think necessarily that we're going to see a huge rally in Q3 as we start it, but we are going to see a general bias to the upside, primarily based on the overview that I'll give you here in a minute of the database. Just looking at some of my notes here, that, so we're a little ways off. It looks like earnings, the big earnings, will start on July 17th, roughly, right around, I think that's the week of the next Fed meeting. So we have that coming this month as well. So there's going to be plenty of things to go through. And this week will be interesting. I think everything will be focused in on that employment numbers coming on Friday. Everything that really is coming out is really not much. Just real quick before I get into the analysis for tonight, is I really believe what we were seeing in the starting last Tuesday, was that rebalance trade, where window dressing has always been called for a lot of years. So all these institutional accounts, the mutual fund companies, ETFs, everybody's rebalancing, and that may be why we saw some of this movement, I would say, toward the Russell. We did see a little bit of rebound, but it pulled back a little bit on the bank stocks. And to me, the bank stocks still look reasonable going forward. I think there's still going to be further recovery. And there's folks out there still grabbing onto that old narrative about the banking crisis as well. And we went through the stress test last week, and everything's wonderful and beautiful, and it actually is. So not that there aren't banks, like I've said before, that have issues. You have to really do your homework on these, but the technicals are still fairly bullish as we come into starting this third quarter. I'm just looking here at the final thing. I just kind of go back to this yield curve. Now, maybe I'll talk a little bit more when we get into the interest rates. But the yield curve, I put a tweet out, I think it was Friday. I'm not sure when I put it out, but I was talking about that, and this is the normalization, is that the reason why we're inverted like we are is because of the normalization and the Fed's using the tool to normalize of the front end of the yield curve. It's the conditions that normally, if you look back on yield curve events, it didn't precede a 14 or 15 years of an artificial rate holding rates near zero or as close as they could toward 1-2%, when they really should have been where they are now at anywhere from 4 to 6% over the last several years, if the markets would have been able to price interest rates the way that they should have been. So let's just be realistic here and understand that we're coming out of this very unusual period. So you're likely to see very unusual stats that are going to come out of this market. And I think it's, so far, it's been pretty laughable. Maybe there'll be a recession. The good news is we'll start to see sell signals out of the database. We'll start to see some attrition going on from the standpoint of what's going on with the database. We're not seeing that yet, and I don't expect to see that for a while. And even when we do start to see that from the intermediate database, that will actually mark more of the halfway point of this rally than anything else. And so anyway, let's get in and look at the database, get into tonight's analysis. I think that's where the most of the things will be. So just remember, again, just reminding you, is that today's video, next video will be Wednesday afternoon, and then Thursday will be it. And the following week, there's just going to be Sunday and Thursday next week. So anyway, let's get into tonight's video. Sorry about that. It took a really long time to get transitioned over to my other desk. So let's take a look at the database here. This is the daily numbers here, and I'll go through those first, and we'll back up and go to the intermediate. But we're 64.66. We did see for tomorrow's opening, we have 1,132 buy signals versus 196 sell signals. So we got a big bullish ratio, primarily on daily 3.2. You'll see here weekly. I'll talk about these numbers, but we had another 1150 buys against 212 sells, and that pushes us up to the 67.13. I was talking about this getting to 68%. So let me go over and just bring in that intermediate database here. You'll see here 67.13, and so we have right now, we have 8 of the 12 sectors are long, and some of these are doing pretty darn good. Capital goods and transportation have been the big rotation, negative on conglomerates here, but we still have basic materials, energy, financial are still out of play, and utilities are out of play. So maybe some of these other sectors will come back into play here at the moment, but we're 67.3% bullish on that level. So let me just come up on screen here. Just so you know that this, the database, and I've talked to you a lot about this forward-looking approach from looking at the database and what it's likely to do. It's still got, I keep telling you, at least 80 plus, as many as 120 days of forward-looking positive outlook in the market. That puts us right into year end and the possibility of, maybe seeing, I think as we come to Q3, and I'll cover this in the technicals here as we go into the S&P next, and we'll go through the long term. It looks to me that what we're really seeing here is a continued rotation. We're starting to see some of these secondary stocks, but right now in our database, forget the indexes, forget all the segments, we've got 67%. So basically 7 out of 10 stocks have been issued a buy signal. Stocks, mutual funds, ETFs have been issued buy signals, meaning that almost 70% of the market is trending or has the probability to trend. And most of these trades have been on for a little bit. We've been just seeing little incremental 2 and 3% increases. So we've been well over the 60% range for a while. So just understand that this is something that's very big. Say that out loud. 7 out of 10 stocks are trending up and have probabilities of continuing towards their goals in these models that we're running here. So that's very big. Will all of them make it? No, they will not. But there's probably 60% of the 60% will, and that could drive your portfolios, all those of you that are PortfolioXpert or Wavetech users, that is going to drive everything forward. So let's go ahead and go back to the technicals here and take a look at the S&P. All right, so as always, we'll start off here with the hourly chart. Hourly chart looks like it could be under pressure here. And one of the things that I want to bring up, we did see markets come in, I think just a tick or two lower, although it's showing, we'll get to the actual numbers here in a minute. They're just showing me the hourly change right now, which is up 250 right now. So a little bit of a bid in there at the moment, but it looks like we're going to try to roll back through this 10-period moving average sometime in the next couple hours. And that number right now is 44.83. And it looks like the target range would be around 44.60. We'll go through the market grid here next, so we can kind of set up at least a market grid for, I'll do the weekly market grid as well as the daily here. And then we're going to move into monthly and quarterly charts. We're going to go bottom up. We're going to start with the hourly, daily, weekly, monthly, quarterly. So we're going all the way on this S&P. And a lot of this, these concepts and ideas that I'm going to generate here will actually flow through to primarily the NASDAQ. The Russell has a bit of a different configuration. What's interesting here is right now it's showing the probabilities are showing that there's a 90% probability that the moving average, the 10-hour moving average, is going to be penetrated, and even all the way the 76 probability on the 21. And those, like I said, those values are 40.83 and 44.62. So 44.83, 44.62 is the range that we're probably going to see some stability around that level. Even though they're showing some decline, there's still going to be, the 21 is going to be positive enough that whatever that value is that's rising every hour will be a key value to watch for support as you go through the overnight session here. All right, let's go to the daily. Just pick up some of this. Yeah, you can see the daily still got a really positive tone. We did get RTX sell signal daily. I'll cover this in a minute. We got RTX sells across the board. There was definitely a huge squeeze going on in the markets from the standpoint of what was going on from Tuesday on, as I was mentioning in my opening comments, is that that was a total squeeze, total rebalancing. Nobody cared about the prices. It was like, we got a goal. We have to do what we have to do, and we don't care about the prices. That was pretty obvious, just the way the market traded every day. There was just that constant underlying bid. So hopefully you folks are able to make some money off of that. So I am going to take off the, well, I'll leave the percentages up here. Let's just get to the market grid. It's over here on the far left here. And market grid S1 4426. And let me just get these right numbers here. Make sure I've got the right numbers going here. Yeah, so what's interesting, I just realized something. No, this is the futures. I thought I had the wrong chart up. But yeah, so somehow this thing is not updated here. So let me just do something here real quick, folks. I want to take the market grid off, put it back up. Okay, it doesn't look like it's calculating right. So we'll go to invite onlys, market grid. There we go. Yeah, it needed to be put up. That, by the way, just so if you are using indicators, just know that sometimes you have to refresh these things. They just don't always work. It's pretty amazing. But we did get that RTX sell. But here's the numbers now. So S1 now 44.78, S2 44.67. That would put us into those numbers on the hourly chart I just discussed. So that would be a range to look for. You can see, and this was interesting, and I think somebody somewhere on YouTube or Twitter was saying, hey, but the indicators and the algos were suggesting down while the market was going up last week. And what they were is right now the PPM1 is still slightly positive. PPM2 is still in trend mode. So that upward slope is what's driving the markets. This 21-period moving average, I often refer to this as the primary trend line that you want to use, or the primary demand line in the market. So that's a huge number. I thought we would get a move down. If you recall, I was talking about the potential for 43.50 to 4,300, and we printed down to 43.68. So we didn't quite make it to 50. We fell a little short. And it was from that day forward that this big squeeze came on. And so we just continued to go sideways. We rebounded back over the 10, and we're seeing this upward flow yet. Still looks to me that they're going to come back and retest these levels, and the 21-period moving average should be tested at some point in time. The algos are still suggesting that momentum's going to flatten out. I'm just going to move the chart over. If we come back over to February, we had a similar pattern. We did make a slightly higher high this time, but we did get this pattern where I remember the algos were suggesting down, and we kept getting these bounces off these highs. So this pattern maybe gets into some kind of zigzag pattern or something up here, but it does look like there's some potential pulling back. But I would look for R1 today is 44.98, so we're all of a sudden pressing 4,500, and I believe let me make sure I get everything up here that I need to have up here as we go through this presentation. So the upper end of the range today is actually 45.29 is RXT for today, 45.19, 45.08. So we could challenge this 4,500 level, and then maybe see some kind of rejection off of there. Typically, when we get above a whole number like this, we get above a 4,500. If we print up there, that you'll get a reaction, and a lot of times we'll come back into the previous handle, otherwise 44.70, maybe all the way back into 44.50 or change, and that's what this, at least that's what the algos are suggesting, that we still have some potential for the market to decline from here. I'm not sure from an index standpoint that things are going to go just straight up. I think we do have some work to do up in this range. I'll show you something on the weekly chart here in a minute that will help that out, at least understand what's going on there. So once again, probably R1, S2, potential of R1 or R2, S2 would be the extreme range for Monday's session. And remember, we're going to have a holiday session as well, because most of the market, we'll see how many folks are showing up tomorrow, but I think a fair amount will. All right, so let's start to dig into some of the weekly and get into some of this stuff. The weekly charts, as I mentioned last week, are really what's driving this market. The angle of attack is huge. See right now, it's got an 88% chance to stay above the 10-period moving average, but that's long ways from here, 43.16, and this is the futures. Once I get off, when I go to the monthly, I'm going to switch from the futures to the cash market. So make sure you be careful with some of the numbers I mentioned will be cash related, not on the futures. So we'll switch off of this next. I'll remind you in a minute. But these moving averages still look very positive. It still looks like for the next couple of weeks, this is going to be the driving trend line to really watch. Like I said, right now it's 43.16, and just trying to see what the rate of change is. It's roughly about 35 handles per week. So you can add in the next couple of weeks 70 handles to this 43.16. So all of a sudden you're looking at 4,400, somewhere around there. The high 4,300, 4,400 is going to be major support in this pattern. So algos, like I said, are still suggesting that we're going to stay positive, even though the momentum is not accelerating. Now, these numbers stopped calculating, but you may recall going back just probably at the beginning of last month, we were talking about on some of the weekly numbers that there is some fib targets up here. Let me get them on the screen for you. They are right now at they were 44.19, which we exceeded. 45.18 is that previous fib target, and there's one number I want to point out up here, which is the a fib number beyond that will put us up at the potential for a range of 40, I'm trying to get the number, 47.25 to 47, 47.25 will be a pretty key number. So we're talking about 47 handle. Remember, 48, the high was, let me see if I can locate this just very quickly here. High 48.08 looks like was the high. So I was telling you the other day that we're a lot closer to making a new high than a new low. So some of these fib targets are still valid. We still got some decent upside. The angle of attack is positive. When we get to the NASDAQ, you'll see more of that. So let's go ahead, and I'm going to flip over here to SPX, and we're going to go to the monthly charts and start to break this down. Now we talked to, I mentioned this, I believe, on the video for Friday, where we looked like we were going to get a close above the RTX level, and we did. So this is a monthly chart, and monthly RTX was 43.81. We went out at 44.50. This is cash now, not futures. But if you look at the cash, there's still upward momentum building here for the next, not only for this month, but coming into August. And so we're likely to see a sideways for the next 2 months based on the RTX. That's typically what happens. It's 1 to 2. So we may just kind of go flat for the month of July, but we're definitely going to stay above this 10-period moving average, and those weekly numbers will also be dominant. They'll be more dominant as we go forward here. I don't have the market grid numbers when we're looking at the cash, because the cash needs to trade before I can get the next pattern. So I'll discuss that on Wednesday night's video when we do that. So we'll come back to this. But right now, there's only a 33% probability to get below the 10-period moving average. So this is pretty substantial, and I'm going to just blow this up. I'm going to mention this number. It goes back, if we go back all the way to February, there's some really crazy Fibonacci targets out here, and I'm just bringing them down so we can see them here. But that's a crazy number. I have to say them out loud. 61, 18, and all the way up to 71, 77. So this number up here seems somewhat wild, but it will take anywhere from 8, 12 plus months, a year plus, if you were going to hit this target. It looks to me that the momentum is going to stay positive. I don't think we get anywhere near that number. And maybe 2024, we have an election year. We got a lot of stuff. This is way, way down the road we're looking at. So for right now, though, we have definitely a big positive angle of attack. And just going back to blowing this back up so you can see this is definitely substantial. So here's where it gets even more interesting. And we're going to go to the quarterly. Like I said, this is not updated yet because this is the SPX, the cash. And so what we're looking at right now is we are well over the 10-quarter moving average. There's only a 10%, 90% chance that it's going to hold right now. And that value at the moment is 41.64. So it's a long ways away. So even if we end up putting in some kind of little intermediate top, getting some consolidation during this third quarter, that we're going to say 4,200, just rounding things off, it's going to be a pretty substantial number. And like I said, I will go back and update some of the numbers once SPX trades tomorrow. Then I'll be able to get the market grid numbers for both the monthly and the quarterly charts on the cash market. But we still have a pretty decent angle of attack where PPM1 is up at a 1.69, PPM2 2.48, and these are just really big numbers. So I'm going to expand this out so you can see this just a little bit. Also going to take the percents off here just so it's not in the way at the moment. But you can see that the algos are suggesting that there is an upward slope. This chart is, if you look at the date at the bottom of the cursor, that's Friday, October 1st, 2027. And so that's years out in the future. So that I would say the good news is we're probably going to remain above this 4,200 level. This 10-quarter moving average is going to be pretty substantial. One of the things, and flashing back to 2021, and if you recall, we had this big outside reversal. I'm going to kind of replay something for you. We got the outside reversal. We got a confirmation in Q2 of 2022. Q3, we got new low again. And what I was talking about is we could get a combination of three. So you get 3 bars down. These are quarterly bars. 3 bars up. We are in finishing 3 bars up. And then the pattern is going to get interesting from here, especially if we are able to make a new high from the last quarter and get a reversal and close lower. That may give us some of the sideways into these moving averages. Maybe 4,200 could be a possibility, but it might not happen until after we print close to 46 or 47, then there may be a rejection. So I'm just going to build this story as we go through the next week or so, as we see the market, and I can see some of these other numbers once we get these charts to update. All right, so let's go ahead and we'll jump forward to the NASDAQ. All right, so here's NASDAQ daily, and sort of interesting because the daily, I mentioned this, I think Wednesday or Thursday when these numbers came out, but we have upward projections here for 16,072, 16,537, and 16,825. So that means all the big boys, the Apples and the Microsofts and NVIDIAs and everything that's driving this thing is probably likely to continue on. And this is pretty interesting. And this is the daily chart right now. But the same scenario that I've been talking about, we're really seeing the moving averages, the algos starting to flatten out. So maybe this ends up to be an island projection. The key things that you're going to watch for is that we stay, we're going to round it up and just say, we need to stay above 14,950. That's going to be your major support number. If we break through that, then maybe there's more of a consolidation. But let's go over to the weekly chart just to set that up. This weekly chart is just absolutely insanity. I've been talking about this angle of attack here for a while. And looking at the market grid for the week, we're looking at S1 15,209, S2 15,609. We're at 15,340 right now. So that's probably going to stay within the S1 R2 range, or absolute extreme case would probably be S2 R2. So make sure you check those numbers. But look at this angle of attack. This is the projections are pretty insane as we look forward. And it doesn't look like there's much to derail this thing. So typically, out of this type of pattern, we could trade back to the 10-period moving average right now. Let me get the right number. That 14,521. I think if you see that number, it's probably a buying opportunity to trade a bounce. That would be equal to the 40-day moving average. We talked about this a couple of days ago. So just keep all of those numbers in line and make sure you're tracking these PPMs, especially the weekly charts. These are substantial, and it goes hand in hand with the database actually moving up to 67%. Like I said, basically 7 out of 10 stocks are in trend mode. And you just don't, and I've been arguing this point for a while, folks, and you know this. Get a lot of folks that are watching this video regularly, is these things, I've been talking about this continuation of this pattern going all the way back really into March and April, when we were starting to get some more traction on the intermediate database. And this thing just does not roll over. And this is not a point. We don't usually go into a full collapse mode when we're at 67% bullish. And especially when the last 6 weeks or so, a fair amount of traction, we'll say about 15 plus, we were down into the 50% handle going back 6 weeks ago. Now we're, like I said, we're printing 67%. This is not the place where it comes from. If we went back to even 2020 and the pandemic, right? In January, I was getting calls from our institutional clients. I didn't know you folks. I didn't get any retail participation on this channel until February or March of 2020. And I was getting calls from our institutions going, "Hey Bob, I'm getting a lot of sells in my portfolios. What do you think's going on?" It doesn't, in the markets we're trading all-time new highs, and we're just rotating out of all kinds of stuff. Matter of fact, we were, I believe, the database was well below 42%. And when we came into February and March, we were just basically out. And of course, we know March was the rollover point for the whole debacle that we went through in 2020. And so we were already positioned for that event, interesting enough. And so what happened, if we just carry everything forward, is that the technicals were ugly as well. Markets went down, and we know what happened literally on March 23rd. Remember that, like yesterday, is our daily database got almost 5,000 buy signals on March 23rd. And as we came into July, the weekly and intermediate database came in, and all of a sudden was buying with both hands, and we were printing up in well above 42. We were in the 50 and 60% handle, and everybody was telling me the market's going to collapse. You don't understand. And the database led us into all the way through 2021, which was a great year. And we got into that recovery really well, coming into Q3, Q4 of 2020, and operated through that all the way into the fall of 2021. And if you were following at all, I was screaming about energy stocks, screaming about financial stocks as we came into November of 2020. And that was a good place to be. In January of 2021, we exited the financial stocks. So all the folks that got talking about bank crisis and everything we went through recently, we have really minimal positions or anything going into that sector. And it's still that way. If you recall just a few minutes ago when I went through the database, I was talking about financials is one of the neutral databases. We haven't owned it since literally, I believe it was January or February of 2022. So it's been a while since we've owned anything that looks like a financial stock from that standpoint, from a sector viewpoint, and from many of the groups and the regionals and all of that stuff. No way we had much to do with it. And the point of bringing this out is this is why the database is so important in my work, and for you to understand where my perspective's coming from. And that's, like I just said, we still have 100, we'll say it 80 to 120 days looking forward. As the database is positioned right now, it could rotate. The technicals are confirming everything I'm telling you. And so I do something, and I've told you this before, reverse fundamentals. If the technicals look like this, what are the fundamentals that are going to happen? The only thing that makes sense is there's further economic growth, and we're not going to see a recession. All of those things that I've been talking about, that is what is being projected here on this screen. So sorry to get on that little riff there, but the importance of understanding the database, the rotation, and that it's not just somebody going X amount of stocks over the 100, 200 days, some simple moving average. That's maybe it gives you some perspective, but what I'm showing you is this is 70% of the stocks are in trend mode there's over 600 variables that we look at every day. We run 10 million calculations every day in our database, and 10 million combined with all of the stocks. We have almost just short of 16,000 symbols in the database. So there's a lot of stuff that goes on every day when we get new data. And so we're looking at all of these factors walking this stuff forward. And this has been my life since 1996 was when I built the first segment of this database to operate, and I've been watching it every day since. So it's quite a few years, getting close to 30 of them. But the whole point is, this is what the technicals are telling us. Everything's in line. And what sometimes will happen, and it happened going back in 2020, is I'm getting a viewpoint, hey, we're getting all these sell signals, and even though the markets were printing up at all-time new highs at that time, they were printing near the highs, that we are starting to get a lot of sells. And we've seen this happen in different configurations. So I'm just telling you, there's probably not a lot of downside. Doesn't mean there's not any downside, but there is minimal downside in this particular segment as we come into Q3. I guess I'll make that the summary and using the NASDAQ here as that to look at. I'm not sure we looked at the daily, but we will here just real quick to tie this together on the NASDAQ is what you see. We've got some Fibonacci targets up here. 16,072, 16.5. I did mention that. So these are those numbers are hanging out there right now. So keep all that in context. All right, so Russell's next. Interesting, this is daily Russell. We've got some new Fibonacci's that came out I mentioned these on Friday. Upside right now is high target 1, 2015, 2088, 2133. Not a lot of what I call you probably haven't heard this term if you haven't been around the channel for a while, but if you have, there's not a lot of VIG. So we're not getting confirmation at the moment that we're going to see this big acceleration to the upside. The key support levels are these fib below. We're looking at right now 1843 is pretty substantial support, but we do have a slight angle of attack that's bullish. But it looks to me that there's not a ton on the upside until we can see some confirmation from the PPMs. We're probably just going to stay in this upper sideways range that we're building. We were down in a lower range going back to March of last year. We stayed in that range. Now we're trying to maybe set a higher consolidation, and maybe that number's 1820 to maybe around 1950 where we're trading in. We'll see what kind of configuration. So it's not super bullish, but it does look like we could have some stuff, some positive tone here. Let's take a look at the weekly. Weekly also has some upward fib targets. We're looking at 1994, 2103, 2120 on the upside here. So we're not quite got up to these upper targets, but the weekly, I'm just going to key on this. I'm going to make this look back 50 on the algos just so we can get a calculation. We can see, looks like we'll is projecting positive angle here for at least a couple more weeks on this pattern here. So we should stay above the 1840 level, should be that key level that I just mentioned. All right, sticking with the weekly charts, we'll go to the 10-year. 10-year continues to waffle back and forth in that range. I talked about the market grid range, and we pushed a little higher. I thought we would top out around 380. We pushed all the way up to 387 high, but that was 388.88 was RTX on Friday. I would expect to see this come back in toward this moving average, get back toward 370, we'll call it 372, 365 on the downside. We should come back in and just continue to waffle along this upward sloping 10-period moving average. So rates are still going to have a slight bias to the upside, and especially since I forget the exact date, but I think it's around 7/24, 7/25 is the next Fed meeting. So we're likely to see some kind of little upward bias. The Fed has told us over and over that they are going to raise rates 2 more times. Are they going to do it next meeting? I don't know. Markets have not done a very good job at pricing in what the Fed's going to do. So I would not look at the Fed fund futures very, very closely. I don't think they have any real relevance on anything. But the algos are suggesting that this is a weekly chart that I have up. looks like another week or two, and then we could see some downside weakness, maybe get back into that bottom end 360 range on the downside. But I think we just hover along these moving averages. They're going to be substantial support. And if I just grab the middle of that, it's like 365 on yield. And we almost, there is a fib targets on the upside here at 401. I've talked about that for a while. That certainly could spike up there. But there will be a bias on the upside on all of these, whether we're going to look at the 2-year next. Let's just do that. The 2-year has a more pronounced upside than the 10-year. And I've been talking about we should just continue to climb right along this line. Let's just see if what I've been telling you is true. We're looking at the low 466 on, and the moving average is 435. We come to this is weekly, come to last week. The 442 was the 10-period moving average. The low was 465, but I don't think we penetrate below this 10-period. And you can see the algo on the 10 is suggesting at least another couple of weeks of further acceleration on the upside. So the absolute drop dead bottom on these 2-year will be along this 10-period moving average. And it looks like all we've done is gotten close to it. We haven't really gotten anywhere. We haven't hit it, and we certainly haven't went under it. But this upward slope is going to continue. So my expectation on all these yields are for them to continue to edge higher, to be flat to up. 365 bottom on the 10-year, and on the 2-year, we're looking at probably, we'll call it 450, 448, something like that is going to be your extreme bottom on that for right now. Anything happens outside of that, then there's some other event that we're unaware of at the moment that is occurring. All right, I'm sticking with this weekly chart here on crude oil. Been talking about this. Crude oil is in big time downtrend, but we're hovering around that downward slope 10. Right now, you can see the last trade 70.38, the 10 70.97. So we'll call 71 bucks is probably the higher end of the range. The downside is at 60, I believe 67. Let me get this fib target here. 65.23 is going to be your extreme. If we just look at the market grid here, we're looking at extreme 65.78 on the downside, upside 75.30. R1 is 71.79. So we're probably going to be S2 R1 kind of pattern here. This is weekly oil, but the real deal here is that we are on a pronounced downtrend, and it looks like there's going to be continued downward pressure. And I've mentioned this before, that we're in this, we're in the summer driving season. It's July. That's even hard to say out loud. It's hard to believe it's July already. But this is where we're at, and this downtrend is continuing. We're starting to see some incremental price changes on some of the pumps around the area where I'm at, maybe in your area as well. Okay. Go to gold next. Gold, this is weekly gold. Algos are continuing to suggest downward pressure. We traded into fib target 1, which is 1921. The low, I believe, was 16 last week. Low was 1900. So we went well below that, and now we're looking at probably, and I've been saying this, we're probably going to get to the 40-period moving average, and that right now is 1877, and it's rising. So 1880, we're pretty close to bottoming here on gold, and we'll see how the pattern sets up. But it looks like at least another week or two, you can see the algos on the 10 are suggesting that we're going to start to bottom here, probably interesting enough around, I've got the cursor here on Monday the 17th. Algo's pretty much bottoming on an extreme there, and at least from right now is projecting that we're going to see some upside. That's also, I believe, the week before, or that is Fed week. I'm not sure. So maybe there's some interesting things coming out of there. We'll get some leaders from gold market, but gold's still under pressure. We'll take a quick glance at the daily. Daily's trying to turn up a little bit. Major resistance at 1950, 1930, 1950 is pretty major resistance right now. We're trading 26, so we're probably not going to get much above that. The extreme would be into around 1965, 1971, something like that would be the range you'd expect to see. All right, Bitcoin. Very interesting. Daily got a horse head formation, which is typically bullish. It usually resolves itself to the upside. Probably going to see a retest of that 31.5 level. That's very possible. The algos are staying basically neutral here. This is a daily chart. We'll go to the weekly here in a second. But the upslope is still pretty solid here, and we're basically struggling, but it wants to stay over this 30,500. Last trade, 30,645. So we should stay above here. We should see a challenge of that 31.5 level. We'll get above that. There's no fib targets or anything, but we should see some higher prices above there. Let's take a look at the weekly. And I've been kind of harping about this weekly chart is just really bullish. Now, last week we got an RTX sell, so that tells us 1 to 2 weeks sideways. So expect watch that range here. It looks like S1 25.8. We'll call it 25.9, and R1 is let me get to the right. I'm in the wrong hash mark here. S1 29.748, and we've been down to 29.508, so we've hit S1. S2 is 28.9, R1 31.2, R2 32.021. So I would mark 32.021 as a possibility looking at the weekly parameters for any kind of upside. Okay, folks, that's going to do it. Just reminding everyone, if you hung out to here, that's good. Make sure you hit the like button, subscribe, all that good stuff. I suspect most of you are already subscribed. But just reminding you, next video will be Wednesday afternoon after the close, and then Thursday. And next week again, there's going to be a Sunday and Thursday videos only. Next week I'll be out of town Monday, Tuesday, Wednesday. So we will resume on Thursday afternoon, but I will do something to try to set up the week for you as we come in. And we'll have the benefit then on next Sunday of knowing what employment numbers are and what kind of things happen. And just in a closing summary here from the standpoint of what I'm seeing coming out this week, I think everything's going to be looking forward to this. The employment numbers on Friday. There's probably going to be some backfilling out that total, I guess that amazing squeeze job that happened on the rebalancing trade. We should probably see some sideways to down. We got RTX sell signal on a monthly, got RTX sell signal on a weekly. So we got a lot of stuff just suggesting very choppy this week, probably no leading markets from that standpoint. And I think I set things up pretty well. If you just joined, go back and watch the first section on the replay. So folks, thanks a lot. We'll see you Wednesday afternoon next. Have a great holiday, those of you in the U.S. here. Be safe out there. And I will see you on Wednesday afternoon.